get started and what we're going to be doing this morning is trying to incorporate multiple time frames in our trading. Now, before we get started, I do want everyone to take a moment and read over the disclaimer. Trading is risky, even when you're trading binary options and spreads. You should never trade with money you cannot afford to lose. I do want to point out that this is an educational room and should be treated as an educational room. That means we are not making trade recommendations. We are just showing demo trades, okay? Now, for those of you that do not know me, my name is Gail Mercer, and I'm going to be your hostess this morning. And I have over 15 years of a trading experience. I actually started out with a company in Greensboro that programmed indicators, and it just amazed me that we could actually see tick by tick the movement in the market. And to be quite honest, I fell in love with the price bars. Now, I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities magazine, Traders World, and Top Shelf magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, and the New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, what we're going to do this morning is actually look at incorporating higher time frames into our trading, whether it's just one time frame or whether it's 2 or 3 time frames. We're going to see how we can do this. Now, if you would like to contact me, my email address is gm@tradershelpdesk.com, or you can visit my website at tradershelpdesk.com. So let's go ahead and get started. And what I want to do is just kind of go over and let's focus on the NASDAQ this morning. And in this presentation, I'm using NinjaTrader. And each one of my windows has 2 time frames. It has a longer term, which is on top. This is the 12-minute, the 180 in the weekly. And then on the bottom, I have a 3-minute, a 45-minute, and a daily chart. Now, what I always try to do is trade into that higher time frame, okay? That to me gives me an edge because I'm going with the higher time frame, okay? Now there's a couple of different ways that I do this. For example, right now you see the 45-minute and the 180 are both trending up, okay? So that means I can use a 3-minute and go into the 45, or I can use a 12-minute to go into the 180. Does everybody understand that? In other words, these are kind of correlated. I know that my 3-minute goes into my 45, my 12 goes into my 180, simply because I have them beside of each other. Now, the one thing that I would immediately notice if I was taking a trade on the 12-minute going into this 180 is this reversal bar right here. It went up and made a high, and then they pushed it right back down to the almost the low of the bar. Does everybody see that? Now, if you have watched my webinar on price bars, you would know that this is a reversal bar, and more than likely the next bar would go down. Does everybody understand that? The next thing that I do is look down to the 45-minute to see, because this bar is going to end before the current bar on the 180. Does everybody understand? When I look down, I see that there is a 3-bar reversal pattern right there. So that means that the bar that is currently forming should come down and make a low. In addition to that, if you look at the stochastics, you see that the stochastics is oversold. Again, confirmation that this market is probably going to come down. Is this the perfect time for a long entry? No, it is not. Now, it may go up just a little bit. And the reason that it would go up is your 3-minute is oversold, and it should pull back to this ATR. It could even pull back to this ATR up here. Do y'all understand that? And what would cause these retracements that we're looking at? It's really what everybody refers to as a zigzag pattern. When the market, if it's going to go up, it doesn't just go straight up. That's a dream world. What typically happens is it goes up and then it retraces. Then it goes up, then it retraces. Then it goes up and then it retraces. And then it will fail to take out that high. Do y'all see that? This is when you know you're potentially in trouble. When you get this lower high that fails to take this high out. Do y'all understand that? Y'all were really quiet this morning. Now, if you're in a downtrend, the opposite occurs. You go down, you make a low, you come back, you make a high, that's your retracement. Then you go lower, then you make a high, then you go lower, then you make a high, and then you'll make this higher low. When you make that higher low, it should take out this high right here. That's when you know potentially the trend is changing. So right now, when I'm looking at this, the one thing I would want to do is say, okay, we're making higher highs, we're making higher lows, we're making higher highs. Now, if we come back to here, this uptrend is still intact. Do y'all see that? You could do the same thing over here in that you take and you say, okay, we made a low and now we have made a high. The issue with this high is that you're failing to take out this high. So if I just draw a line straight off of that, you're really not taking that one off. Do y'all see that? And it is because you need this retracement over here on the 45-minute chart. Do y'all see that? I'm going to shrink this one up just a little bit. Now, if we come over here, we've made a high, a low, a high, a low, a high, and a low, and a high. Now we're making the low. What is it about this low that says, we might be in trouble here? If we wanted to take a long right here, what is telling you on the 12-minute, it might not be a good idea? It's a lower low. That is right, Bill. Now, even if you didn't catch the reversal bar on the 180, okay, let's say you didn't bring up the 180 for whatever reason. When you see that on your 12-minute, that is a clue. I need to go check my higher time frame because something is not in alignment. Joe, I don't use Heikin-Ashi candles, so I can't answer your question. Okay, does everybody see that? Now, the one thing I would want to wait and see is this is going to make a high, and it should be a lower high than right here. See that? Because remember the pattern that I drew? This is when you're going to be in trouble. When it cannot take out this high anymore, you're going to be in trouble. And there's also correlations, like if you're measuring the distance between the highs, and if we do it here, okay, do you see how this one up here at the very top, there's not a lot of distance from that? And these are things that, you know, I notice on a chart, and I do it automatically when I'm looking at the market. All right, if you take this high right here, okay, when they broke through this high and they made a new high, you have quite a bit of distance here, okay? All right, when they go on to make this high, look at how it diminished. Do y'all see that? And then when it went from this high to this high, look, it's not a lot of room. This was your biggest leg of the trend. Do y'all see that? And this is telling you not that the trend is changing, okay? It's telling you that you're going to get a retracement on your higher time frame. It's losing momentum. Exactly right, Bob. Now, if you add to that your stochastics, okay, do you see how you made a higher high and your stochastics made a lower high? Okay, that's divergence. It's just regular divergence. Okay, and this is telling you this is fixing to retrace. In other words, this is fixing to come down. Does everybody understand that? Now, does anybody know why the market works that way? Why does it make new highs and then retrace or pull back? Yeah, it's referred to a lot of different things. It's referred to retracements. It's referred to a pullback. And you can almost say it's sort of like running a marathon, okay? You don't, you know, if you're running a marathon, okay, if you run a little bit and then you kind of have to catch your breath, then you have to run, then you have to catch your breath, and then you have to run a little bit and catch your breath. This is the way the market works, okay? It goes up and it kind of takes a breather. It's this breather that's the retracement. This is the breather for the market. You know, traders are taking profits, okay? When it comes back to here, other traders are going to enter and push it higher, okay? Same thing. And you can see it on all of your time frames, okay? Now, there's two types, in my opinion, of probabilities, okay? And this is where I'm going to bring in Nadex. And we're going to get rid of all of my drawings. And we're going to pull up a chart in Nadex. And we'll bring this one up. And I'm not going to take a trade because I'm here to educate you, not to trade. Okay? But I want you to really realize something, because I've got a lot of questions about this. Okay? Now, you've got probabilities that are displayed within the premium. Everybody understands that, right? So for example, this one right here at 74.70, okay? anything, if you're going long, okay, anything that is above 50 is the probability for it closing in the money, okay? So in this case, it's 2350 above 50. Does everybody understand that? So if I take this trade for 73.75 or 73.50 at the time, that means that my edge is 23.5, that this will expire in the money. Does everybody understand that? Now, what is the profit potential? Is the difference between $100 and what I paid on entry, which was $73.50. Okay, that would be your profit because this is a long position. Okay, now the one thing about this, and I encourage you just to take a day and watch the premiums, is that this premium is constantly changing based on what this current price bar is doing. Does everybody understand that? So it can actually go from 73.50 down to 50 if the price bar were suddenly to fall down to this point. Do y'all understand that? So in this example, if you're not using any indicators at all, you can say, okay, according to this premium right now, okay, I've got a 24% edge. Now, this is one way to measure your edge, okay? The other way is by using indicators or technical analysis, and this is what I do. I use the technical analysis combined with multiple time frames. That means you have a higher probability of it moving in your favor, Bob. That's your edge. And trading is really all about probabilities. Okay, we're going to do another one, and this time we're going to set this one to a 3-hour chart. Okay, so this is our 3-hour chart, and this is our, should be a 15-minute chart. Okay, so you've got a 180 over here, the equivalent of a 180. You've got a 15-minute over here. Now, even though this probability is at 60 on the premium, okay, so I've got a 10% edge, okay, using indicators in just typical price movement, I would say, no, I think it's going to come down. Do y'all understand that? Now, the difference is, and this is what confuses people, this is visual. You can see it, okay? When you're trading indicators, there's no number that says this gives you an edge. You have to learn it from experience, okay? It does not mean that every time I see this pattern, it's going to work in my favor. You know, this is a reversal bar. This is a reversal bar. It should come down, okay? Now, if I know this, it's called a leading indicator, and it should push price down. Understand? Bob, did I answer your question about the edge? I don't consider it an edge over what, okay? But if you wanted to look at it that way, Bob, all right, right now it's at 60. Okay, that's 10% over the midpoint line, right? So I have a 10% chance of winning over losing. So this 10% is my edge. Does that clarify it for you, Bob? Because 50-50 is your midpoint, okay? So anytime it's just at 50-50, then really, you know, it's not considered an edge because it could go either way, right? You could win or you could lose. Well, when one is at 60, okay, then that gives me an edge of 10%. So I've got a 10% chance of winning over losing. You could say it that way. I don't like to say it that way. Because the reason I don't like to say it that way, Bob, is because if I tell you you have a 60% chance, okay, what does that mean to y'all? Somebody just type me up what 60% means to them. It means you win 60% of the time. So if you take 10 trades, you're going to win 6 trades, right? And how many trades do you have to take to see that probability kick in? If I take exactly 10 trades, 6 of them should be winners. Is that what that means? Actually, you need 1,300 trades. For this probability to kick in, you need 1,300 trades. And that's why I don't like to say 60%. Now, if you take and you flip a coin, okay, of statistics, statistically, you need 1,300 for that probability to kick in. But again, if you're saying 60%, Robert, of ending in the money, does that mean out of 10 trades, 6 will close in the money? Because that's not the way it's going to work. Exactly, Robert. It doesn't work that way. Statistically, you would need roughly 1,300 trades. At the end of 1,300 trades, you will see that it will be a 60% probability, okay? This is what it will end up being, okay? But, and this is the key that experienced traders will understand and new traders will not. There will be a drawdown, and it could be 200 trades where it's just like everything you touch will lose money. That's your drawdown, okay? And that's what we call it. We call it a drawdown. And then suddenly, out of nowhere, you'll get, 500 trades that make money. And that's what new traders don't realize. It's not the first 6 trades are going to be winners and the next 4 are going to be losers, or you'll have a win, a loss, a win, win, loss. It just doesn't work like that when you're trading, okay? And that's the reason you don't see me focus on these probabilities very much, okay? Do y'all see how this has gone down now? You only have an edge of 2%. See, my probability came off of my higher time frames. And to me, that will overrule this probability in the premium. Do y'all understand that? Does everybody understand that or no? And this is one of the things I even struggled with as a trader, is trying to understand this. What do they really mean by probability? And I sat down and did the coin toss, okay? And I did it 100 times. And I mean, just doing a coin toss, at the end of it, you're going to have a 50% probability. You know, it's either going to be heads or toes, or tails, not toes. Okay. But there were a couple of times where I had 10 tails in a row. Okay. Does that mean the probabilities are not working? No, it just means I have to throw it more. Because when you're trading indicators, Bob, the probability for me is that this is a reversal bar. And most of the time when I see this reversal bar, the next bar is going to make a low, okay? So what I'm actually trading is the probability of this being a leading indicator. In other words, this is telling me the next bar is going to be lower. So that's what I'm trading instead of just a premium number. Do you understand that now, Bob? Because, you know, the higher time frames are going to dominate, okay? A lot of times you can see when they're turning just by looking at reversal bars and how the highs and the lows were forming, okay? Now, I just explained to y'all about highs and lows in a trend, right? I don't look at the premiums at all when I'm trading, not for probability, Cindy. See, to me, there's kind of two types of traders, okay? There's the probabilities trader that is going to trade this number right here, okay? They're going to make their decision off of what the premium factor is, okay? But I'm going to trade using the higher time frames because I think they will dominate. Normally, this is a 12-minute, normally, okay? But in Nadex, I use a 15-minute, okay? And I think that question, it's a good question, Bill. You know, do we want to view higher time frames at a factor of 15 or other? I think it depends on what you're seeing on the initial charts. Now, if I go back to my charts, which are over here, okay? So right now on the 12-minute, you can see that there's not a lot of distance between this high and you've got divergence here, okay? So this is pretty much confirming what I've already seen, okay? When we go over to the 180-minute chart, I picked up on this reversal bar. That was one of the first things that I noticed. And if we extend this line out, you can see that there was a rejection of that high. Do you follow me so far, Bill? Now, I could trade the 3 and the 45, or I could trade the 3 into the 12-minute, okay? but I'm still looking at a higher time frame to kind of give me direction. In this case, it's telling me down, okay? This 3-bar reversal pattern over here is telling me to go, that the market will go down. Do you understand so far, Bill? Now, I could trade the 3-minute right into this 12-minute, but I also know that I have an issue right here with these congestion dots. When these congestion dots form, and that's what they're called, price usually comes down here and then it will go back and test this. Do you understand, Bill? So this would be my potential entry point. So I already know, instead of trading the 3-minute, because it's probably going to break through this ATR, I'm going to wait and I'm going to let this get to 59.53, and that's where I'm going to try to short it. Now, why would that be important to me? All right, if we go back and we look at the way I said trends work, okay, we have up, up, down, up, down, up. That's the formation I want to see. Does that clarify it for you, Bill? Because that's the very definition that a reversal bar over here will create a downtrend over here. Okay, if let's say that you went short right here, and let's say you were using, you know, a 2-hour binary and you went out of the money, okay, somewhere around here, you're probably going to lose because it needs to do this retracement here. Do you understand that? And I know it sounds complicated, and it is when you first start practicing it, but a lot of times it can be as simple as saying, okay, I'm making higher highs, higher lows, higher highs, higher lows. Ooh, I'm making a higher high. Technically, it is a higher high, but it's struggling. It's lost its power to go up anymore, okay? And this is where you don't want to be taken along, because if you are, you're going to be buying the high, okay? That's what we're trying to not do. We're trying to buy a low, not a high, okay? If we're going short, what do we want to do? We want to sell the high, and the high will probably be around 50.53. Does everybody understand that? Now, for new traders, a lot of times the easiest ones to do will be looking at the premium and saying, okay, I've got a 13% edge. I've got a 6% edge, okay? But if you would just bring up one higher time frame, okay, then sometimes you will say, okay, I don't like the way it did not take out this high. Okay, it took it out by one tick, but it's forming that reversal bar, so I'm going to bypass this trade. Do y'all understand that? That's the way that, you know, the best way to start when you're looking at higher time frames. You know, a lot of times it's just, okay, let's mark the highs and lows. Let's go look at a different market. Let's see. Let's go look at, we'll look at the USD JPY. Let's do the 3 p.m. And here's a 15-minute chart. Okay. Now, the first thing that I would do on this 15-minute chart is saying, okay, we made a high, we made a low. Now we've made a high, potential reversal pattern here. Okay, so we may get some retracement. All right, now I'm going to bring up another chart, and we're going to make it a 60-minute. Okay, so we have a 15 over here, and I'm going to make this into a 60-minute. So now if I draw this pattern, and I'm not going all the way back, okay, I'm just doing it like this, and then we have a high. Now we made a low, and we're on the process of making a new high. This is my previous high. Does everybody see that? So if I wanted to snap a line on there, I'm going to erase all the drawings and snap a line on here. And I want a horizontal line. And I'm going to put it right up here. Now I'm going to change this to instead of black, I'm going to use blue. And I'm going to make it a little bit thicker so it stands out at me. Okay. So right now I'm expecting to take out the 112.08 area, right? Now there's two ways that you could actually trade that. One is right here at 58.50, or you could do 32.50. Okay. The 32.50, there's no edge. Within this premium, there's absolutely no edge. You're just getting a cheap binary. This one has an 8.5% edge. Does everybody understand that? Now, based on the 60-minute, what do you think the USD JPY should do? Should it go up or should it go down? I would agree. I think it should go up. All right. What is the next question if you're trading a binary option? How much time do I need for that to go up? Okay. And this is, again, this is just what I look at. Okay. We had an up bar, up bar, up bar. I probably do not want to do a 3 p.m. That's going to be too long. Okay. And this is where instead of doing a 3 p.m., I'll come in and say, 12 o'clock is too soon, but 1 o'clock may be beneficial. So this is where I'm going to come in and say, okay, what binary options are available on this one that I could potentially do? And this is where I'm expecting it to go, okay? And I'm going to customize this. We're going to put it to blue. And we're going to make it a little bit darker. Okay. Now, again, you've got a couple of choices here. Now, my choice would be I want to be under this area. So I'm going to probably choose this one. You could also do this one. This one is about a 10% edge. This one, it can go either way. Do y'all see that? Now, that is easier for a new trader to binaries to do versus adding the indicators and trying to use multiple time frames with multiple indicators. As you build up your experience, you know, a lot of times you'll add in the indicators. It's like me. I know that my edge comes from my indicators, and that's what I trade. Does everybody understand that? Any questions? Yes, there is a greater profit potential, which is why I do those, Ron. I do like the 35s because if you're risking 35, that gives you a profit potential of 65 at expiration. I set my target usually at 85 to 90, okay? But again, this is where, you know, knowing that it should take out this high right here at 112.08, to me, this was the advantage. Not within the premium, but knowing it should take out this high. Because we are in an uptrend, it should take out that high. Does that answer your question, Bob? Ron, I don't understand your question about yes or no's. Oh, okay. Thank you, Ron. And what you, in this, I've done a presentation on this before, where when you're doing these, like this was a 35, okay? So if you had a 35, okay, and it's gone up, it's been 45, I know, okay? So that was about $10 in profit, okay? Where this one, if you had bought this at 60, you've now made about 10. Yes, I am recording it and I will send it to Nadex as soon as we finish. Okay. Robert, I trade S&P spreads using 3, 5, 30, 60-minute charts. Is this okay? As long as it works for you, it is. Gail, based on your experience and knowledge, is there a major disadvantage of just using charts for the exact time frame you are looking to trade without involving multiple time frames for the best trade setups? I think there is personally. You know, do I have statistics for that? No, I don't. But what you're doing is sort of like the NASDAQ that we were looking at. You know, the higher time frame said the market was going to go down. Well, you would have went long. But the entire time, the higher time frame was saying, don't take this long position. And most of the ones that you get stopped out of, if you just pull up the higher time frame, you can say, what was I thinking? And really, if you just simply pull up one time frame, okay, one additional time frame and look at it and you're going, nah, I really don't like that too much, okay? And it will prevent some of the losses. Nothing is going to prevent all losses. That's what we call the holy grail in trading, is something that makes money 100% of the time, okay? It just does not exist. What we have to do is learn to manage the risk so we can handle the drawdown and be there when everything that we touch turns to gold, and everybody has it. Not to mention surprise, support, and resistance on higher time frames could walk into it on the lower time frame with your eyes wide open. Absolutely right. Well, I use them for trending and counter trend trading, Joe. You know, the NASDAQ, that wasn't a trend trade. It was a counter trend trade. We knew that we were going to get a retracement. Okay, that's what you're trading. And on this one, you know, right here, I would say, okay, it's got to close above this area. Okay. If I see it rejecting this area, I'm going to scratch the trade. I ain't staying with it. Does everybody understand that? Okay, any other questions? All right, I hope everyone enjoyed it. I will be here next week and actually be going over using other charting platforms with Nadex. So y'all might want to join me there as well.